Okay, everybody, good morning. Happy Tuesday. Gonna do a little bit of Bitcoin analysis here today, more on the trend lines on market cap, trend lines on the price itself, exponential trend lines, power trend lines, and stock to flow trend lines. Some variations of what I've always covered, of course. The best way to look at this stuff is via the trend. And you can look at trend lines on stock markets, bond markets, GDP, population. But we're going to look on Bitcoin mostly today. These are usually my best performing videos. And, as all you know, in Eastern Europe, I like to talk a lot about supporting Ukraine and freedom and liberty there. But I'm just going to keep alternating. Some days on Ukraine and economy, macro stuff, and some days more on Bitcoin, which no matter where you are in the world is the best form of sound base money that you can possibly hold. So having said all that, let's get into it. Let's take a look here at this chart. Got the old power curve. Got the old market cap here. This is market cap of Bitcoin. This goes all the way out to 2050. Okay, as you can see on the axis. So we'll play around with trend lines and see what looks the best based on past performance and possible future trends. As you can see here, it's clearly, when you put this on log scale, this is log scale, base 100, goes up 100 units each time. Each line here. This is obviously not a straight line. It's just not. The data itself is not a straight line. You can draw a line through it, but you can tell that it's curved. It's concave down. The bulge is facing up. It's not a straight line. All right. And as I've said many times, this is an indication of a power trend, but more importantly, it's an indication of a trend which typically exemplifies networks such as many nodes having fewer users plug into them and a few nodes having many users plug into them. That sort of a distribution, that snapshot is itself power. So we would presume that the Bitcoin system follows a power trend because the price, the most salient piece of information in the marketplace, looks like a power curve. Let's demonstrate it yet again. So again, if this was an exponential curve, which is most things like the stock market, the bond market, GDP, population growth, then a straight line on log scale would fit right through it. Okay, so let's put a straight line on this market cap. Okay, I'm going to zoom in because it's a lot of times the 50-year thing kind of makes it hard to see. You can certainly put a straight line through Bitcoin. And exponential growth is constant growth. So over time, it can compound to something faster or seemingly faster than power growth. Seemingly faster. But as we can see here, it doesn't really look great for Bitcoin following this straight line because you can see that the price itself only hits 4 times. In fact, once here in 2011, this was a huge pump. The price was like from pennies to, $30 here. And that was the first empty Gox hacking occurred right here. I remember it very well. I remember seeing articles about the price dropping immediately, then rebounding, but eventually went down to, a couple dollars at the end of the year. So it intersects the exponential trend here, and it intersects again once. And then, a little bit more than 4 times. A little bit here in the COVID madness. But other than the COVID madness, if you take that out, it's 1, 2, 3, and 4. 4 times it intersects this line. Hasn't touched this line since 2022. Doesn't look great even by the eye test. And if you do an R squared, it's 85%. And this trend line is simply measuring the price or the expected price in the future over time, and time is defined as days. It's a very important feature of this. It's days since the Genesis block. Okay, so we're getting close to 6,000 days now in 2025, days since the Genesis block. That's actually a good thing to point out. What is the exact? It's very close. Yeah. 5,985 days is where I'm looking at this. 5,985 days since the Genesis block. That's actually May 24th. Okay, a few days ago, but because of the supply, the actual Bitcoin supply dynamics, I'm always a few days delayed with these models. All right. Now let's look at power. Power trend, it's more like a network trend. It's not going to be a straight line on log scale. It's a beautiful curve here, rolling through the peaks and the troughs. They intersect many times. And if you just take the noise off of the exponential trend, we can see that clearly the power trend is a better fit on Bitcoin's growth. R squared is better as well, 96%. It's the same thing. This is price over time. Price over time. All right. And very exciting. We're getting close. This is on the market cap now. This is not on price. The trend is, we're still under trend on the market cap. On the price, which we're going to look at in a second, we're above trend, but not on the market cap. All right. So there we have it. Now I want to introduce, so I'm just going to take off exponential. Doesn't look great. Actually, let's just go and show you in the future very quickly. I've talked many times about how I think probably 10 to 15 years from now, 2 to 3 more halvings is when we're going to seriously compete with the global financial system, possibly get on a Bitcoin standard. That puts you right here, let's just say 2035. Okay. Look at the market caps, expected market caps. The power trend expects $50 trillion. Okay, we're at $2 trillion today. The power trend expects 50 trillion. It's a totally reasonable number. Okay, for a growing network that's worldwide, censorship resistant, people starting to understand how to hold Bitcoin, how to use Bitcoin. Even the gold market today, a 6 millennia old asset as far as like written history goes, or some sort of records, let's say, of trade in the marketplace. It only has a $20 trillion market cap at the moment. And it's screaming to all-time highs. So gold is 20 trillion. Bitcoin is 2 trillion. Totally reasonable that in 10 years, Bitcoin will have flipped gold, and it will be about a $50 trillion valuation. Now, you're not reading this wrong. What if Bitcoin was on an exponential trend? What would be the market cap of Bitcoin, this system, on an exponential trend? All right, that's 56,000 trillion. What is 56,000 trillion? It's 56 quadrillion. $56 quadrillion in 10 years. So anybody who tells you that Bitcoin is an exponential asset has not done the math and is not trying to understand things, because world assets might be $1 quadrillion if you add in all derivatives, which are very sensitive, and the NPVs of derivatives. U.S. system-wide assets are probably a couple hundred trillion. The stock market in totality in the world is under 100 trillion. And we're thinking that Bitcoin's an exponentially growing asset. So it's going to be 60 quadrillion in 10 years. Obviously, the numbers are laughable on their face. So it is not an exponential asset. Anytime you see a tweet or you hear someone saying Bitcoin is an exponential asset, they are not doing the math. All right, so I'm going to take off exponential now because it's just, again, just to drill the point home that exponential just fails time and time again. Now, another interesting one who's been floating around for many years, started a couple months after I posted the power trend of Bitcoin back in 2018, is the stock to flow method. Now, with stock to flow, what's going on under the hood is entirely different than the simple power curve of price and time. So price and time, which is the power curve, which is this beautifully curved, concave down curve, all right, that at the moment is increasing about 45% per year. 45% per year is the slope of this black line, and it will decrease over time. The power trend, the x-axis, where you could say price, or it's actually done on the market cap, was the original paper from Plan B back in 2019. It is price, or the market cap, in terms of S2F. All right, so it is a price on S2F. All right, so what is the S2F? Well, first, again, this x-axis is just there for help, for you to understand it. We're actually, for the power curve, this black line, the x-axis is actually, the only way the formula will work is that this x-axis is up to 6,000. The number is 6,000 days. That's how you make trend lines. You don't go from any random date. All right. It's completely different than trend line analysis on TradingView. It's completely different. It's mathematically based on some starting position. In this case, the starting position is the Genesis block, and it's January 3rd, 2009, and it's days from there. But with STF, it is actually a power curve. All right, so he did do it on a power curve, but he's using the increasing stock to flow, which we know into the future due to Bitcoin's predictive price schedule. And so Bitcoin is already at the moment under gold, all right, as far as inflation rate or monetary growth rate. It's less than 1% per year. Less than 1% per year. The S2F, last time I checked, is something like 118. All right. I'm not a fan of S2F for many reasons, because nobody talks in terms of S2F. This is kind of an economist phrase. Also, people don't use it consistently. I've done many videos on this. But if you take the inverse of the S2F, you will get the annual growth rate of Bitcoin. So 1 divided by 118 is the current annual growth rate of the Bitcoin supply system. All right. And as we know, that's never going above 21 million, another useful feature of Bitcoin. Nonetheless, if we can still sort of shoehorn in a power curve on the S2F, because we know S2F in the future. Whereas with the power curve, which is price in time, or market cap in time, of course we know the future because it's just day by day. So this, we're at about 6,000 now, then we'll be at 6,365 a year from now, so on and so forth. That's how you count up and draw this beautiful trend line. With S2F, you're counting on the stock to flow increasing. That's how you make this trend line. So what you get is this stair-step effect. That's why it looks like this. But it's more ham-fisted than that, and I will go into that more in the future. This is not the Plan B model. This is just this is the most accurate you could actually draw for the power curve. It's just, for the stock to flow curve, it's taking the all-time stock to flow values, okay, which were very low back here when Bitcoin was increasing very high, a couple 100,000 or a million Bitcoins a year in the early days, then a couple 100,000, so on and so forth. And now quite a few less per year. And in dollar terms, it's still less than $20 billion a year, something to think about. Bitcoin terms, it is, I don't actually even know at the moment, but less than 100,000, I believe, per year, right? So you're taking the stock to flow, all right, as your x-axis in your denominator. And very quickly, as we can see, just right here, it might actually look decent here in 2017, okay, because it kind of, catches, you could say it even kind of catches the top, all right, but it looks less decent here in 2021, all right, and if you go back to say, for example, here, again, thinking that it could kind of catch the top is not necessarily the goal of a model, because then you'd have to ask, well, is it catching the bottoms, so on and so forth. So I'll get to this and sort of explain it a little bit more with some future predictive trends of this. But again, we're just on market cap. So what I want to do is show you, again, how you can analyze the total value of Bitcoin, the system. These are 3 ways that are all valid. Clearly, exponential is just silly season. It's great. I would love it if Bitcoin is $50 quadrillion worth of value in 10 years. It's not going to happen, but it would be great. The power trend, which is, again, a beautiful 96% R squared, and then the S2F power trend, which is actually similar R squared. I'm not putting that because it gets confusing when you're talking about different things. Again, this is not on days, but it's on the expected S2F of the Bitcoin system, and you get this stair-step effect. Another way to predict the market cap of Bitcoin is to look at the power trend on the price. All right, so remember, the power trend on the price at the moment is about $100,000. So we just went over it recently at $109,000, $8,000 Bitcoin. So if we just take the power trend on the price and then multiply it by the expected supply, that's another way to do a trend, and probably the most accurate way. So I'm going to put that now as a dotted line, and then you can see here. Now, again, did you even see it, by the way? You see how close it is to the other black line? It's a dotted black line. Let's zoom in. All right, very close. And in my opinion, this is, again, another reason why the power trend is such a beautiful model, because you can look at it in different ways. You can kind of slice and dice it, and it's going to give you not only very nice looking to the eye test and also to the R squared looking curves, but it's going to be predictive as well. And we'll talk about the predictability. And I'm not saying predictability like you can predict if you're going to win the lottery. I'm talking about scientifically, statistically, within bands of confidence, probability bands. Does it predict? Is the future value indicative of the past prediction? That's what I'm more of a statistic terms. Then for sure, I know the Bitcoin price is going to be, $600,000 by the end of 2030. That's what I mean when I say prediction. So there we go. Now, for the future, when I do market cap stuff, sometimes I just mix it all the time. But probably the best way is actually this one, number 4. Because you're taking the power trend on the price, which I'm going to show you in just a second, multiplying it by that Bitcoin supply schedule, which everybody knows is going to top out to 21 million, or a little bit under that, around the year 2140. So this is probably, the dotted line is probably the best. Okay. And again, the all-time stock to flow is not terrible, but it moves more. It's more volatile than the Bitcoin all-time trend line. And I'll illustrate that now. Okay. Good morning, Gio. So capital controls are an obvious option if Trump truly seeks to upend the global balance of trade, but they would also be the nuclear option. As far as going back to the old trade talk, as long as he keeps the pressure up, both on the European Union and on China, more controlled economies are certainly more likely. I'm not saying that we've had a free trade system before Trump, but capital wants to find the most efficient, ways of being utilized always. And so, as has happened in the United States, for example, the last 40 years, 30, 40 years, things have gone overseas where they are cheaper, and the local economy gets more specialized to a different set of job skills. If politicians want to kind of shoehorn those things back to something which might seem like an older, greater time, there are going to be a lot more hurdles that the markets are going to have to pass to get their products to market. And you could see companies go around these laws in various ways if they can, and if they can't do that, or if they're doing that and the government wants to try to stop that, then yeah, capital controls are certainly an option. But I don't want to get too sidetracked on capital controls. We'll keep it on Bitcoin for now. But let me know later if you have any more questions, on that, because trade is very much interlinked, I think, with what's happening right now in the war in Ukraine and the war in the Middle East. Okay, so point is, the Bitcoin market cap, just like price, is a power market. It's a beautiful trend. It's one of the regular old regression analyses. You can do exponential, logarithmic, linear, or power. You don't do stock to flow. Stock to flow is not a trend line. Stock to flow is a way of measuring Bitcoin's value. But if you do that, it itself is a power trend. So we'll talk about that more in a second. But the point is here, I just wanted to show you this fourth one because I haven't showed it enough. And I'll get back to it when we talk about how Bitcoin can accrete versus gold, base money, all the rest in the future. I think this is going to be the best value to use at it, although it's pretty close to this value, which is the market cap. I mean, extremely close. Again, shows you why I like the power curve. All right, so now we're moving on to the price models again. Now we're just looking at price. Price is an easier way to digest this, and it's an easier way, not even an easier way, it's a more, it's the best way. It's the highest signal. The highest signal in the market is price. So if you do models and derivations from price, that's the best way to go. So let's start with exponential again. Awesome straight line. Let's go back to the analysis I showed you in 2035. What is the Bitcoin price going to represent to be $50 quadrillion Bitcoin market cap? There you go. 1.2 billion. $1.2 billion a coin. I will never complain if I'm wrong here, but I'm trying to go to probabilities and help people out on this channel. All right. I will never complain if Bitcoin is $1 billion equivalent 10 years from now. And obviously, as we know, if Bitcoin gets to $1 billion, then we've gone through some sort of a hyper Bitcoinization because I mean, just it would be impossible to calculate price inflation, I think, otherwise. Or you would clearly just revalue the dollar in terms of Bitcoin if we're at $1 billion Bitcoin. So that's what it would have to be in 2035 to represent a $50 quadrillion market cap. It's not going to happen. All right, so let's take that off. As we can see, it's not a straight line on log scale, so we got a power trend. Bitcoin is a power curve. That's the way networks grow. So what is that 2035 price? $1.5 million. The end of the decade, as we've talked about, I think it's going to be something like 600,000. This has actually come down to about 550,000 as we've pulled this trend line down, the last down cycle. But this is going to go back up, I think, to something like 600,000 by the end of, as we move into the bull, as we start to pull this, it's very exciting times because price itself is going above the trend. The trend line will be pulled back up. I know I repeat these things and I'm getting different people jumping on the channel, but sorry, guys, this is what it is. Okay, so $1.5 million. There we go. Good morning, Roman. Yes. Everybody enjoy a cup of hopium with me. And not even really hopium, just I think normal probabilities. That's what we're going for here. Okay, so we got the exponential trend, we got the power trend. Power trend is way better as far as predictability than exponential. Let's take off exponential then. Now, as I talked about, with the market cap charts, okay, with the market caps, everything's better looking at it in price terms. Let's look at the predictability of the power trend in the past. And as I've said many times, the Bitcoin power trend has been pretty awesome since about 2016. That's when it seems like it's settled into a power trend of growth that it can handle. What does it look like? I'm going to put it right here, dotted black line. Look at that. You saw it draw up there the first time. It's, you can barely see where that line lays. And so let's zoom in. There it is. Current price, which is higher than it actually is right around now. I think 108,000, whatever. This chart's only drawn from May 24th, whatever. Sorry. 108,000 roughly Bitcoin price. The all-time power trend puts the trend at 102,000. And if we had only taken the data from 2016 and held it until today, and extended, of course, as the regressions do, you can predict into the future. Predicted in the future, the 2016 regression, the prediction is 107,000. So if we stopped here, right, with all data exactly here, when Bitcoin was only $1,500, we can get all the way to 107,000 today, which is pretty close to the all-time data. If we caught 8.5 more years of data, the trend would be 101,000. So 101,000 versus 107,000. And there's a gap of 8 years of data there. To me, this shows an unbelievable trend line. Just an unbelievable trend line. And if you're curious, I have this data on my website. Okay, so let's look again. Where's May 24th? Still can't get it from the Zoom. Back to May 24th. Jeez. Here we go. If you had only stuck with the beginning until 2016's data, 107,000 on the trend. Let's look at where we can see that on my website. I have this, still the only chart I have up. Sorry, I know it's not as fancy as the charts that I'm showing you here, but here's the regression. Here's some percentiles. You go down here, the second table, and it shows you how the trend line has evolved. All right. And if you look at the last column here, this is like the X factor of how good this trend is. If you go to 2016, if prior year-end trend lines held, projected price today would be, and there's the number we just looked at, 107,174. If we look through 2017's data, it would be a little bit higher. 2018, as the price is rising, it catches that to 141,000. 2019, 125,000. 2020, getting a little bit lower, 134,000. 2019, 120, 104, 101, 101 is the all-time number. So really from 2016, things look pretty good. A little bit high on 2015's curve, 226,000. That's a double is probably not great. And obviously you can see things are more wacky. 2014, catching the big boom from 2013. And then if you go back to the 2010 boom, we should be at $4 billion Bitcoin, nearly $5 billion Bitcoin. Of course, we're not. So it took a few years for Bitcoin to settle into this trend, but settle in it has. That's the point. Okay? So in my opinion, again, this is a great indication of how strong the Bitcoin power trend is, because you could look at data only to here, 2016, and predict out and be only, $6,000 off based on today's price. Today's price. And I say today in quotes because, yes, I know it's a couple days off. But because of the supply and the data feeding into the model, I have it a little bit later. You have to wait a couple days. All right, now let's go and put on the old S2F trend. Again, I showed you this on the market cap. Now we're doing it on the price. And by the way, the native S2F trend line can only be done on market cap. Okay, he was doing it based on the valuation of the Bitcoin network over time versus the stock to flow. So you get the stair step effect, right? And then you divide that by the expected Bitcoins to get the expected price. That's how the stock to flow model needs to be calculated. The problem with that, again, is if you look at this trend now, not just in market cap even looked a little bit better, but if you looked at it in price, you start to again see, and this is the all-time trend. This is analogous to, take off the dotted. This is analogous to this. Okay, so the all-time power trend, this is the all-time stock to flow trend. Okay. Again, the question needs to be asked. It almost seems like it catches, the bull here in 2017, but then it stops. Okay. And then you say, okay, it catches the bull in 2021, but then it stops. Is that an accurate way to account for Bitcoin's price action? I would say no. I would say much better is the black line, because we're not looking for a trend line that, let me say it a different way. We're looking for a trend line that can go through most of the data and catch most of the distribution. If we want to look at the extremes, then you got to look at something like, like this, where you can draw bands over, how rare the top is. Like we did in 2017 here, and I've showed this many times. This is just the top 90th percentile moves. So very rare air here. All right, but if we want to look at the normal churning of Bitcoin price action, clearly, something that slices through the data like the power trend looks better. And then if you want to look at the extremes, you look at the extremes as far as these bands go. So that's what I would say here. But anyway, this is the all-time stock to flow. Now let's look at a few different ways that this has been published throughout the last, 7 or 8 years, I guess. Just like we did with the power trend, where we drew zoom in a little bit. Just like we did with the power trend, where we did the 2016 curve, and I know you can barely see it, right? It's overlaying pretty well. It's a pretty great predictor, right? Predictor is a loosely held term there. I'm not saying I can predict the future, but it's a pretty good indicator. All right, the 2016 trend. Let's look at the 2016 stock to flow trend. See how that looks. Quite a bit worse. All right, so much higher. And again, yeah, it kind of catches the peaks, but is that what the point of a trend line to be a top indicator? I would say no. The trend should be your friend. You should know generally what's going on here. And, the stock to flow from 2016 didn't touch Bitcoin not from 2016, from 2021. Yeah. Too many dates. The 2016 stock to flow model, which stops picking up data after 2016, wouldn't catch the 2022 price action at all from November 2021 until March 2024, when the ETFs were approved. And this was even a premature boom anyway. So that's a long time, 3 years where it doesn't even touch price action. All right, let's look back in the past a little bit. From 2016 here, it's a little bit better. You can see that it's more smooth because the stock to flow is the changes are happening quicker. So the stock to flow adjusts more. So it does look okay here. But again, as we move forward into the future, you want to ask, is that really, a all-encompassing trend line analysis? And I don't think that it is. So that's 2016. The gap, and let's just look till today. Obviously, we're way under. Let's just look at actual numbers to sort of judge this. Okay. As of May 24th, 2025, the price 108,000. All-time power trend 102,000. Power trend until 2016, which we just talked about, 107,000. All-time stock to flow trend, Bitcoin should be 350,000. Seems a bit aggressive. And if we had only looked at the model from 2016, stock to flow power, and it is a power trend, $578,000 Bitcoin predicted. $578,000 Bitcoin predicted. It's aggressive. It's aggressive. And look, this might even predict the top out to next year. So if we go out to December 2025, the regular power trend, the all-time, might be close to it. It might get up to $360,000 Bitcoin, but it shouldn't be a top indicator. It should be something that shows you where you are relative to the trend. Like the price is just nowhere near this right now at the moment. Whereas look at the price on the power trend. It's right on it. Reminder, I started publishing the power trend in 2018. So it was already on the good trend. It was already on the predictable trend line from 2016. So already for 2 years, it was doing that when I noticed it. And all this goes back to Trolololo, by the way. He was doing this on logarithmic regressions back in 2014. Bitcoin was looking kind of logarithmic. But as it settled down, it actually turned out that it was a power function. Okay, so we just did that with the sort of the scientific power curve versus the scientific stock to flow, which again is just a power curve, but the x-axis is not days. It is the stock to flow itself. Okay, so stock to flow was like 0 back in, the beginning of Bitcoin, and now it's 118. So you get that. That's why you get this stair step effect with the stock to flow model. Okay, so now let's just for fun, let's look at the original. Actually, let's look at the original post from Plan B. Came out after the power curve that I did this, I think, in March 2019 or so. This is his original model, and it's even higher than the 2016. Now, the reason it's higher is twofold. First, it's not the same date as 2016, because if we're looking at only the data from 2016, it's going to be, it's going to be X. Up to 2019, obviously the data is going to be Y. It's going to be different. But the other problem that he was doing with his models, both in 2019, 2020, and other times, was he was merging coefficients. He was taking the growth rate of gold and the growth rate of silver, i.e. the stock to flow of gold and the stock to flow of silver, in a very arbitrary fashion, and using those as coefficients in his model on top of Bitcoin's growth. And as I've just explained, and I explain often, Bitcoin is not exponential. Bitcoin does not grow like this straight line. It does not grow this way. It grows in this declining rate of growth function, which is the power curve. So if you mix assets that grow exponentially, i.e. gold and silver, with an asset that grows in power, i.e. Bitcoin, it's going to give you a weird result. And indeed it did. So the 2019 model, you see, is even worse than if you had just done a straight up stock to flow, on a straight up power curve on the Bitcoin stock to flow through 2016. That's here. And it's well worse than the all-time, which again, all-time is always going to be the best because it takes all the data, but the all-time is the solid red line. So that's why his 2019 number doesn't even look great. So again, let's just look real numbers, roughly 23rd, 24th May. His original prediction would show that right now in May 2025, Bitcoin is $767,000 per Bitcoin. It's a nice idea. I mean, it's nice, but it's not even close to accurate. And now let's look at the 2020 model. This was a revised model. He's revised it other times as well, but these are just two I'm picking. It's the 2020 model. The 2020 model would predict $6 million Bitcoin by today. $6 million Bitcoin by today. And notice, by the way, particularly in the case of the blue ones, it also happens to be the case for the red ones. All of them are actually kind of more in line with the exponential, the standard vanilla exponential regression on Bitcoin's price. That's kind of where these lines fall, right? Obviously, there's a huge variance. I mean, we are millions for the number 7 and almost a million for number 6, but it's just way off. It's way off in predictability of the value of the growth of Bitcoin. So in my opinion, that's not a good trend, or it's not a good trend line indicator. And most importantly, Bitcoin's 2016 indicator, all right, which is analogous to this one with stock to flow, which is way up there. Bitcoin's 2016 indicator nearly overlaps with the all-time data. So we've been in Bitcoin for 6,000 days, right? It's roughly 6,000 days of Bitcoin, the system. That's my solid black line. Data. Oop. I don't know if my connection is bad. Can people hear me? I may have a bad connection. Let me know if there was an issue there. Hopefully you guys can hear me. Point is, thank you, Mooncrawler. Thank you. So the all-time power trend, I'm flashing it right now. That's 6,000 days worth of data. This one is, I don't know, 2,500 days worth of data, 2,000 days worth of data, way less. And it still gets you a good number. And like I showed you here, pretty much from 2016, you're going to get a good number as far as what the price should be today based on that amount of data. Whereas if you do this with the stock to flow, if you do it with, certainly if you did it even with exponential, but I'm not even bothering with exponential because it's so wacky. If you do it with stock to flow, standard calculations would be my red lines. Like that's just kind of doing it the way that you should if we want to do stock to flow, versus if you do the wacky, let's add in gold and silver growth, which is exponential. Those are exponential assets, not power assets. You're going to get even further off. All of them are way off, orders of magnitude different than the price today. So trend lines are not topping indicators. They should be the trend indicator. It should be of a normal distribution. It should be the, 2/3 of the time, one standard deviation, the data is going to fall right in the middle of the bell curve. Now it's true with my models. Now let's go to a normal deviation model. I'm not using standard deviation here. I'm using percentiles, particularly above the 90th percentile of error. You don't even need to use standard deviation with finance because we have all the data. It's not like measuring the growth of algae or something versus a pond at this atmospheric pressure versus another atmospheric pressure and trying to do, a bunch of tests and, just a lot of different variables in nature. You can't take the full sample size of everything when you run a lot of scientific tests and you run regression trend lines, or in medicine or any other case. You just have sample sizes. You can't get all the data. But with finance, actually, you pretty much do get the data. It's true that there's a different market price every day for everybody, and that market price could be thousands of dollars difference under current, volatility. But still, you have a daily close that's pretty close to a strong, weighted average based on the, depending if Coin Metrics is calculating it or TradingView. You can get a daily close that's, it's going to be pretty close to people's actual trading price that day. You don't need to use standard deviation. You don't need to use sort of traditional scientific calculations. You can be really accurate and use percentiles and look at all the data. And then here, this is where we can start to see topping action. Okay. And as I've said, let's take off 100th, 99th, 98th, 97th, 96th, 95th, even. Let's go to the 94th. I know you can't really see this that well in the tooltip, but 94th is 2.5x. That's, I think, a good indicator of where the top could be. Obviously, we pierced way through it in 2017. We pierced way through it in 2011 and 2013. Not as great in 2021, right? It was just not too many days where we were above it. And who knows, we may be even damper now. It's hard to tell. It's hard to tell. But I still think this is the best guide. So if you go out, our end of our 4 years, again, as I've talked about many times, something like 250 to 300,000 is a possible topping price for this cycle. Okay, so I hope that made sense. Let me know if any questions. Stock to flow is just a ham-fisted way of doing the same power curve. The much more simple, more beautiful way is just look at the price of Bitcoin over time. And we got 6,000 pieces of data here that put that pretty accurate trend line at $100,000 Bitcoin. And now it's getting exciting because we're moving above it, and we could have many days of, $10,000 moves, which I talked about last week. I'll do more of that. Okay, so this is the price. The model should give you the mean. It should give you something where most of the data falls, where you can do actual top and bottom analysis here. This is just a top analysis, not a bottom, but you see my point. And then, having said all of that, I want to go back to this chart, and we can see a difference here. I remember I did this kind of on the fly. I talked about this with Danny on What Bitcoin Did, if you saw that. So this is we're back to market caps now, not price, but market caps. Unlike this slide, back to market cap. Let's take off the power trend. Let's just look at this. This slide also takes 6,000 pieces of data, but it runs it on the market cap. Doesn't look at the price, doesn't look at the supply, just runs it on the market cap. My not hyper-Bitcoinization. My Bitcoin standard date, like I said, is at least 10 years from now. So with 6,000 days worth of data on the market cap, you get a market cap of 47 trillion by 2035. And let's look at 2038 because that's more where the other one was blending. It's 92,000 in 2038. Now let's do the other alternate method, like I said, which is running the power trend on the price multiplied by the supply the supply in the future. Let's look at 2038. Way different. So even though these things look almost identical, they are different, and that's I think an important nuance here. So running it on the market cap is 110,000. But if you run the power trend on the price, i.e. this slide, running it on the price, and then multiply it out by the presumed Bitcoin, the Bitcoin supply in the year 2038, you're going to get a price that is only, a market cap that is only 65 trillion. And then in this chart, I was even doing a market cap on only monthly frequency. So it's going to be different still. So let's see again. The meet point is somewhere in 2038 where we get to 100%. Bitcoin dominance is 100% of all the money that's in the world that's not Bitcoin, which happens to be around that mythical 100 trillion USD. It's 110 trillion on this calculation. This could be too fast. Okay. So I said that with the caveat because I was just trying to get it out there quickly, but it's possible that this could be too fast. Yes, this is possibly escape velocity, as Gio says, but it could be too fast because I'm taking a very simple, rough regression analysis only based on monthly market cap data. It's only, quote, only. We're 15 years in, so 5 years is 60 months. So we're roughly 100 and this is roughly 180 data points. Only 180 data points, whereas this has 6,000. That's actually pretty close. So again, let's go back to the year 2038, somewhere, May 2038. The daily, so it's actually slower. It should be slower. So the daily on doing a daily market cap projection into the year 2038 should be something only like maybe 100 trillion. What's the exact month? Where we get to 100%. It's May. It's May. Okay, so here we got May 2038. So this just shows you how sensitive, this stuff can get. May 2038 on the daily market cap, 100 trillion. 100 trillion. Ignore this one for now. 100 trillion in May 2038. Now this one on the monthly frequency of the market cap, May 2038, 110 trillion. So it's fast. It's probably fast. It's not gonna intercept, at least according to these metrics here. It's gonna be somewhere later, like somewhere here, 2041, 2042. And then ask yourself, well, should we even be using the market cap? We should probably be using the price trend times the expected coins. That would give us a more conservative number where we don't get to 100 trillion until 2040. And maybe it's, I don't know because I haven't run it yet, but we won't get to maybe the intersection until 2041 at 100 trillion, 120 trillion, who knows? But obviously this is where it gets a little bit delicate and very sensitive. But probably for the future, for market cap estimations of the Bitcoin network, this is going to be the one that I'll use. Is you start with the price, which is the best signal in the market. Use the power trend to get a projected price. And then if you want to get to a value of the Bitcoin system, use this expected supply, which, assuming mining operates at a normal, continues to operate at a normal clip, then that's a good place to multiply out. Is the power trend on the price times the expected coins issued at the time. So it's slower. The point is it's slower than directly doing it over on the market cap. And it can be, quite a drastic difference, as you see that. I mean, that's a $70 trillion difference, depending on which way you analyze. And I think it's better, actually, that this is more conservative. It's just always good to pick the more conservative option. So this is probably what I'll be showing more. And I have not yet integrated it, but I just wanted to show you this will be different. And I made this caveat when I was talking to Danny, but because this is a new chart that I'm basically doing, but it's probably going to be later than 2038. Maybe not even too much later, 2040, 2042. I don't know, but this line will be projected out differently. The black line, the black Bitcoin system value. And then keep in mind, this is all, you got to think about a lot of different things here. If it gets to 100%, that does not mean that it's taken over. That just means it's actually 50-50. That means Bitcoin has a value of 100 trillion. Let's just call it 100 trillion. But that also means that all the gold, silver, and unbacked fiat money in the world is also 100 trillion. So it's actually 50-50 on the pie chart. So maybe the world can go on for that, for another 10 years. Who knows? Until we fully denominate into Bitcoin. It becomes more philosophical, projecting 20 years into the future, like all these futurists and who is it? Ray Kurzweil has said the singularity is going to happen in 2039 or something like this. Maybe the singularity will happen at the same time we denominate in Bitcoin. So that's what I wanted to show today. Sorry, I didn't read this one from. I'm going to try to read the Greek. Philippos from Philippos. I always wonder about the gold in paper Reich marks during the Weimar Republic. Wasn't this an exponential decline of the paper value going all the way to zero? Is it something that could justify 1 billion for BTC? Yeah. So back, asking the question about here, going back into sort of a hyper Bitcoinization strategy, it's totally possible. And again, I'll say this 1,000 times. I'm not complaining if it happens, obviously. I'm just trying to help everyone here, including myself, project for the more logical scenario. And as you can see on log scale, basically everything but the power curve looks like crazy numbers, right? Even go out to here, like 2035. The power curve is still showing 1.6 million, 1.8 million. Okay? The exponential trend is in the billions. Plan B's 2020 stock to flow trend is in the billions. And the rest are in the tens of millions. It's just, it's a huge variance that I do not, if it does happen, then we are on a Bitcoin standard at that point. That's a calculation problem. There's no way that like people are calculating the price of eggs at these Bitcoin adjusted prices. I don't see it. Clearly we're on a reset if that does happen. And the other thing I would say to answer your question is, like in regards to Weimar was a very young, new democracy that was coming out of an empire. It was the end of the German Empire. France and Britain weren't great democracies, but they had longer democracies. Britain had a currency for hundreds of years prior to that. So Weimar was a very unstable situation. Of course, it was also unstable because of the crushing war debt from World War I. It would have inflation adjusted to something like $500 billion today. And think about the Allies have given Ukraine $200 billion in total, roughly 100 billion from Europe, 130 billion euros, by the way, 100 billion euros from the US, 130 billion from Europe, roughly 230, 250 billion, whatever. So, and those aren't loans, by the way. Trump was trying to make them loans, but they're not loans. So Weimar had a huge overhang of debt that it had to pay back. It was a young democracy, and it was just unstable. I don't see now, looking at the United States, even as wacky as things are getting and authoritarian as they're getting in many places, I don't see that happening. I don't. Those are kind of famous last words, right? Because, you say you don't see something happening, and it happens. But what I've said really from the beginning of all this is, the Federal Reserve has been around 110 years. Okay, I'm not defending it, but they're not dumb there. They have a lot of models. They can see things, and we're seeing that they're not lowering interest rates according to what the president wants to do. They know that inflation hasn't been flushed out of the system, and I just don't see it. I don't see the rush to the exits worldwide. And if it does happen, I think it's going to happen in the ETF world. It'll happen in. There's not even enough dollars to make that happen. Right? That was the other point I was trying to make. If you go back to the market cap idea, either exponential or stock to flow is big, but exponential is where you really see it. If we're going out and we're talking about a 50 quadrillion dollar Bitcoin value, I'll try to run it. There's something that the U.S. Federal Reserve publishes called total system assets. I don't remember what it is at the moment, but it's something like 300 trillion. As usual, the U.S. is, as we looked at yesterday with GDP and with military, the U.S. is something like 25% of the economy or 35% of the military economy. But let's just say 25%. So let's say 300 trillion is 25% of the global economy, which I think is even a big if, because all of the capital is consolidated in the United States. Like 50% of foreign exchange reserves are dollars. So I think it's more like 50% of the economy. It would be something like that, is 300 trillion. So I think you're still under a quadrillion in total asset value today, right now, today. So I just can't justify less than a quadrillion in total asset value today, and then Bitcoin getting to 50 quadrillion 10 years from now, when Bitcoin is only 2 trillion today. It would be one thing if the exponential trend only took it to like a quadrillion, but it is 50 orders of magnitude different than even all financial assets in the world today. So I totally understand what you're saying, and I totally understand the question. And I understand why people say Bitcoin's an exponential asset. But it just hasn't behaved that way in the past. So probabilistically, I don't think it's going to behave that way in the future. There's also a bunch of other things that are going for keeping the system as it is, like the military, right? And I'm not saying that the dollar is backed by the military or anything like that. I'm just saying that the United States is going to fight very hard, even though Trump is giving a tailwind to the Bitcoin market with the strategic reserve and other topics. I think he's hindering it with the things like his crypto dinner, but regardless, even with all those tailwinds from the Trump administration, there's going to be a lot of headwinds from the United States wanting to just intentionally or unintentionally, like letting the guardrails off of what they have, and not having quote unquote responsible monetary policy, or making sure they don't remain as the dominant hegemon with military expense. And obviously AI is going to challenge the United States more, and perhaps India and China can grow faster relative to the United States. China certainly does grow faster relative to the United States, but I just don't see, I've said this many times about the gold bug industry is, in 1980, when gold was $850 an ounce for 2 seconds, gold bugs would have thought that it was just game on and they would have won. I've always said that about the Bitcoin world is we're very optimistic about what Bitcoin can do. I certainly think it can do most of what is promised from a utopian perspective. I mean, I think you can change monetary policy, you can change military policy, a lot of things can happen, but that doesn't mean that everything collapses at once, is my view. And whereas I think Weimar, again, I'm giving you a long answer to your question, I think Weimar was a very unstable situation. And I would, even as crazy as today seems with the Russia war and the Middle East war, and Trump taking pictures of himself as the Pope, there's a huge apparatus there that kind of has some institutional memory, and it's not going to throw the baby out with the bathwater. And I think it's a very different situation than from Weimar. from Weimar, Germany. It was a long question, long answer, but thank you for the question. It's also a good question, by the way, just for fun, because this one is my sort of ultimate chart. This is my ultimate basic money chart, right? I got available gold and silver here in green, plus unbacked fiat money, which is the monetary base, minus gold and Bitcoin reserves, because you have to take those out because they overlap a little bit. So you get to a number that eventually will get to 100 trillion. Another reason why broad money is not analogous to Bitcoin, right? So we're only at about, quote, only at 44, 42 trillion today. It's going to take a long time to get to 100 trillion. And I think it could take, that could take longer than people think. I mean, it's predictable. It's like, let's take off. It's perfectly predictable that it will happen. This is an exponential trend. That's an exponential trend right there. It's a straight line on log scale. It doesn't look odd to extend out as I do. It looks pretty normal based on the past. So why wouldn't this continue is my point. I think it will continue. And even the days where, like here, you have a big COVID print right here. There's a big COVID print. So we started before COVID at 28 trillion, all right? And we quickly got to 10 trillion higher after a couple years, 2020, 2021, 2022. We got 10 trillion higher. And now we've backed off that because they've cut the money supply. Gold is rising, though. This is going to go faster because of gold. But, it's just a standard trend. It doesn't look completely wacky. And this is why I think this is where you have the merging of these two ideas is everything in the world grows at exponential except for Bitcoin, which grows at power, but it's a fast power. It's a way faster power curve than exponential at the moment. Who's saying it? I need you to get me my coffee, Gio. As I said, I mean, I've heard whispers of this, but I haven't heard has Besant said it? I haven't heard anybody specifically say that it's a global reserve asset. I completely agree. Obviously, it's going to be. It's going to be. But this is why I feel so good about this chart, by the way, and this setup. Even though if I think this is a bit fast, this could be a few years later when it actually intersects. When we get to 100%, it's going to be a couple years later. Based on, again, I'm gonna rework the numbers a little bit, and we got to use this number. But anyway, I think this is a good setup. But what is, to define it again, what is sitting inside this red line? Again, total gold, total silver, market cap that's available. I'm even taking off the industrial, which churns around 14% per year. 14% of gold churns industrial, so you can't really store that as value. 50% of silver churns industrial. You can't store that as value. So that's removed already. So it's only available, not industrial, or not total. Plus the unbacked fiat money, which is the monetary base, minus the gold and Bitcoin. So again, this is a liabilities and asset question. Bitcoin, gold, and silver are assets. Fiat money is a liability. It's just how it works. You can still add them, but if the liability that's used as the core of the system, which it is in fiat money, the monetary base, if that's used as a liability, you better make sure you remove any assets that are backing it that are also base money. So that, again, that's why I said there's no silver in central banks. So you just take out the gold, you take out the Bitcoin, and there is Bitcoin, $50 billion worth of Bitcoin in central banks at the moment worldwide, thanks to our friend Rodolfo at Bitcoin Treasuries. The bottom line, that's the number. That's the guts of that number. But also another way of saying that is fiat money, as you say, Gio, the liability is the money, the monetary base, the core of the system, money, central bank money. But on the asset side of central banks, they do have a little gold, little Bitcoin. But the vast majority of that, 90%, 95%, is actually 92%, something like that. 92% is government bonds. So it's totally possible that Bitcoin and gold will increase. And by the way, as you can see how this formula works, the faster they reserve Bitcoin, the quicker this intersection will happen. So that's another unknown that I can't really model. I suppose I could model it, but I'd have to model the government Bitcoin holdings, which that could grow at a power curve, could also grow at an exponential curve. I'm not really sure, but bottom line is the more Bitcoin that they hold back in money, the less reserves. This green line will be lower because I'm subtracting Bitcoin reserves. You have to subtract it because we're taking Bitcoin against all the other money in the world. So that's why this is like the ultimate chart, because it takes everything into account. And so the more gold and Bitcoin they reserve, gold or Bitcoin, it's important to say, the lower this line gets and the faster Bitcoin can pass it. Are they actually like tweeting about it though? I mean, are they really saying it? So there it is. That is the it was a long presentation today, but I think yeah, I'll listen. I hope Vance comes around. I really do. I mean, as always, I'm selfishly speaking of Ukraine. He met with the Pope, interestingly, and very interesting play, in my opinion, that the Pope, the Vatican electing the Pope as they did, an American who has spoken quite critically of Vance in the past, and Vance himself being a Catholic. And by the way, most of Western Ukraine is this very interesting Greek Catholic unity sort of church, which they look to the Vatican. They don't look to even the Ukrainian Orthodox Church, and they certainly don't look to the Russian Orthodox Church. That's an illegal KGB entity at the moment, rightly so, in Ukraine. But there's a huge proportion, I don't know what it is, 30% of Ukrainians that are in this very unique mixed Catholic church that looks to the Vatican. And so Vance is a Catholic. And again, I know I'm not talking about loyalties. I know that his interview with Ross Coulthard from, was it Ross Coulthard was his name? I forget. But the guy from the New York Times, kind of conservative guy or centrist guy, he was talking about how, of course, I have to balance my faith versus I have to balance my role as vice president. So as Catholics around the world might bow or kiss the ring of the Pope, he doesn't do that because we don't kiss the ring or bow to any kings according to the United States Protocol, which is accurate. So I don't know. It's interesting. I really hope Vance comes around. Compare this to what Vance was saying. I'm going to get back to your question, by the way, about the money itself. I know I can't get away from war and the risk of war, but Vance, compare that to what Vance was saying, like a year ago when he was saying he didn't care at all what happens in Ukraine. These are serious risks that could disrupt the global order and probably make Bitcoin go higher. Again, it's not, great for you guys, not great for us if we're over there. I mean, if we're becoming the line, if Russia opens up a new front against the Baltics. But this also goes back to the other question that Filippo, is it Filippo or Filippos, was saying. It's a lot easier than it sounds, I think, to change the monetary system. Yes, I hope it happens. Yes, I hope it happens in a structured way, but I have no idea if it will. I'm just going to follow the trend until it changes. I do agree, and I do imagine that it's not going to be orderly, right? I mean, nothing, you know, only 100% R squareds are orderly movements. Like we look at the past, it's jumpy. You can't even see the exponential trend because of the. You look at the past, it's jumpy. You look at the Bitcoin past, it's jumpy. It's not going to be a smooth line for sure, 100%. And probably as we approach 50-50, which is 100% value of Bitcoin versus the other side, all the other money in the world, base money, I presume it will be faster, right? No matter how I rework this black line, where actually theoretically the 100% could be a little bit later, 2041, 2042. You know, as we start to get to Bitcoin as a, let's just look here, and it's going to be a little bit later, as I said, but 2030, 2031, it's going to be $25 trillion asset in 5 years. It starts to get to the point where you can't ignore it, but in my opinion, it doesn't get to the point where it's just some insurmountable or it's something that like governments can't adjust to because they're adjusting to gold right now, and gold is $20 trillion. It's a $20 trillion market. It's not like the gold bugs back in 1980 couldn't have imagined a $20 trillion gold market, but it's here. It took 50 years, 40 years, 45 years. It's here. It's not exploding the world. It's a $20 trillion gold market. Why would Bitcoin at a $20 trillion market in 5 years explode the world? I'm not saying that it can't. It absolutely could. It absolutely could. We could have a race to the exits and the hyper Bitcoinization. But there's so many other interests. There's so many different things happening around the world. And specifically, a big one is I don't think the U.S. is ready to give up their global hegemony just yet. They might not have a choice, but they're going to fight that. Yeah. No, I mean, sure, it's a great talking point to talk about the failures of the Nixon administration and why he did go off the gold standard. That's a great talking point, and I would use it too if I were running for politics, which I will never do because it seems like a tough gig where you can't see your family much. How does it look on linear? That's also helpful, right? Log scale makes everything. Let's look on linear here. It's also interesting, right? People think that Bitcoin is going to grow and grow and grow, but other stuff is not also going to grow. We know that has to be false, right? We know that prices grow every year. I'm not saying I like it. But house prices grow up, wages grow up, everything grows up every year, year in and year out at some rate. So it's going to take some time for Bitcoin to catch it. The growth is extraordinary for Bitcoin, right? To see that on linear, this linear scale now, and to see that we're, 1/10 of fiat-based money, right? Fiat-based money is 25 trillion. Bitcoin's 2.5 trillion. Not actually. April is sorry. Bitcoin. It's whatever it is. It's over 2 trillion at the moment. It's not the trend line starts in May, so it jumps here, but this is the number. And then if you add on gold and silver, we get to this $42 trillion number. So Bitcoin is 5%. We're at 5%. Right? It's an amazing accomplishment. There's the number. I don't need to do it in my head. 4.4%. So this also helps, doesn't it? Linear scale can show us that, we got some time, in my opinion. In 5 years, if Bitcoin is 25% of global base money, then we're on track. What do you guys think? Notice how quick we do get to escape velocity. Again, this is philosophical when you look 20, 30 years in the future, but even though Bitcoin has that declining rate of growth, it's growing so much faster than everything else. And that's a trend. I'm not making this up. I'm not drawing a line on TradingView. This is a statistical 96% R squared fact that it is growing at this rate compared with all the fiat money that's growing at that rate. Saylor, I haven't checked in recently on it. His predictions were not based on power. As I understand, it was some sort of declining exponential. Has he said recently about when he thinks hyper Bitcoinization will be, or when, saturation or Bitcoin standard could be? Because to me, I think this is the best guide. 10, 15 years to where we're a serious player, and it may even go longer. We may have to get to somewhere like here, out till 20 years from now. Or it could come sooner. Because like I said, when it gets to 100%, and if that number happens to be 100 trillion, it still means that there's 100 trillion out in gold and everything else. Yeah. So 200 trillion out here for Bitcoin. Probably a little bit later because, again, I said this is a very rough projector on the power curve, but somewhere here. Yeah, I mean, obviously we're just throwing numbers out at this point, but I think as you approach 100%, it can't be ignored, right? And it's not ignored anymore. We got, after 10 years of dithering on the Bitcoin ETF, it's finally legal as of last year, right? What a disaster that whole process was. And that's maybe indicative of how the Bitcoin market gets adopted further, right? You have more legal battles for 10 years. And then finally, when people realize you can't shut off the system, and it's 2030, and it's over 100 trillion, 2035, it's over 100 trillion. I suspect it's somewhere here, and actually probably a little bit sooner. I think it's before you get to 50-50. There'll just be At some point, it's going to accumulate where people are going to see the writing on the wall. Like, even people that aren't versed in trend lines, you're just going to see, like, look, we're getting to 100%. Let's go all into Bitcoin on our Bitcoin treasuries and everything else. Again, when it's 100%, it's still 50-50 because there is no overlap in these values. This is Bitcoin, 100 trillion versus gold, silver, unbacked fiat money, which still is probably going to exist at this point. They're still going to have some government bonds. Maybe they'll start buying some real estate. Who knows what they'll back their money with? Definitely will be some Bitcoin, but there's going to be unbacked fiat money. So you add those two things together, you'll get 100 trillion. Bitcoin's market cap, 100 trillion. That's still 50-50. So, but having said that again, I do think that it will be before that point where people will really start to see that these trend lines are just so strong, sort of unstoppable. You know, probably 10 years from now, 2 halvings from now. I think it's when it's going to be seriously interesting. And I think it's going to be interesting even this year, folks. But it won't be on the exponential. Let's just take away the stock to flows. It's just too crazy. Exponential hits $1 million BTC a year from now. Maybe we hit it, but it's a topper. It's not the trend itself. Yeah. And I think, as I said before, I think the fallout from whatever Trump is doing, obviously US remains the biggest capital market. It remains the biggest free capital market. No matter what the authoritarian governments want to try to do, I think institutions will hold in the United States, will remain free, and you're probably going to have some of the grift that's going on right now, these ridiculous crypto dinners. And, just blatant. I'm not saying it is fraud. I've certainly heard some rumors, but you're going to have that's going to be a political battle for Trump, and he'll probably be fine. But who predicted FTX? Certainly not some major Wall Street investors. They didn't predict FTX's collapse. It happened, and it flushed out a lot of stuff as we went below 20K Bitcoin. I could easily see that happening again if we top out at $200, $300, even $400,000 Bitcoin. Maybe we even hit the exponential 700,000 by the end of the year. It could fall 90%. That's just the nature of markets. Okay, guys. I think that'll be it for me today. Thank you all for watching. Thank you for your comments and feedback. I'll update this to be a bit more accurate, where I think based on this curve, which I tried to explain today, which is the dotted line, which will be better, I'll apply that to this chart, and we should get this 100% come a little bit later, something like 2040 or yeah, probably something like 2040 or 2041. I'm not sure. It's very sensitive, as you can see. But yeah, and you can see, the progression of the power trend here on my website. If you want, please donate to my store. You can't see it. Let me hide it. Oh, man. You can't see that anyway. Got the old BTC Pay server just below there on my website. So if you want to throw me a few sats, you can do it on Lightning or on chain, as always. That's the page that will come up when you donate. Appreciate it as ever. Okay, guys, have a good day and chat soon.